Well, the mobile phone company that makes Blackberry is cutting 40% of its global workforce. The Canadian company RIM says it expects losses of almost $1 billion in the second quarter of this year because of weak sales. Shares in Blackberry have fallen by 17%.
A black day for Blackberry. The smartphone maker says it's slashing its workforce by 40%. That's 4,500 jobs worldwide. Its products just aren't as popular as they used to be, and the firm's expecting a loss of more than €700 million when it presents its second quarter earnings next week. Blackberry's shares plummeted 20% after briefly being suspended following Friday's announcements. The Canadian firm, which dominated the corporate smartphone market just a few years ago, has had its market share eaten away by competitors such as Apple and Samsung. That's despite continuing to introduce new products. So what now if the firm just can't sell its phones? Analysts say the best option may be to sell the firm itself.
Blackberry, we know, has been struggling to hold on to market share in smartphones, but no one had really assumed it was going to be quite as grim as this. Blackberry has said publicly that it is looking for options. It has already announced that the BBM Messenger service is to be open sourced to Android and iOS. And now, of course, it's deciding whether the whole company should be sold off. This is the reason, of course, for the huge loss. The new phones that they introduced simply haven't been selling. In fact, that $1 billion charge is a reflection of inventory they can't get rid of. To put this fully in perspective, Blackberry sold just a few million, nearly 4 million of these in the second quarter. And you compare it to Apple's iPhone 5S, that's expected to sell more than 5 million in one weekend alone. This isn't just serious news from Blackberry. Some say it could be the beginning of the end.